Imagine waking up and discovering the spare change in your couch cushions just paid off your mortgage. That's the kind of mental roller coaster that the $20,000 per XRP theory tosses us. And, well, I grabbed a front row seat. So, picture me, coffee in hand at 5 AM, scrolling through crypto Twitter like a raccoon rifling through shiny garbage, when two familiar names, Xena and game dev turned prophet Chad, pop up on my feed. Now they're dusting off a wild idea first floated around in 2022. XRP moon rocketing from $2 to 20 grand. That's not 20 bucks. But 20,000. Now the espresso in my hand nearly did a backflip out of my mug. So right away, of course, my skeptical brain sharpened its pitchfork. We've all seen hopium threads promising Lambos by Friday, right? But Chad, he isn't some anonymous cartoon frog. He's a developer who's fiddled with code on the XRP ledger since the rest of us were still arguing whether HODL was a typo. And Xena, yeah, she kind of swings a digital sword of sarcasm, but she also archives white papers like a librarian with a caffeine addiction. So when those two say, listen up, I at least put down the synonym role. So let's rewind to where this mega valuation math all started. Now Chad's original post outlined 3 dominoes that have to fall perfectly. The first one was Ledger's, or at least the XRP ledger, becoming Wall Street's new conveyor belt of tokenized assets. We're talking stablecoins, CBDCs, airline miles, Chuck E, cheese tickets, you name it, right? The second thing was XRP graduates from trading pair workhorse to bona fide reserve asset, basically digital gold without needing a Fort Knox. Third is the institutions quietly scoop up as much XRP that the public float shrinks faster than a toddler's patience in a grocery line. Now, all of that sounds neat on a PowerPoint slide, right? But theories are like Ikea instructions. They're elegant until you try to build the thing and end up with mysterious extra screws. So I decided to dig in the kind of way that a conspiracy theorist investigates crop circles. Minus the aluminum foil hat. Okay, maybe just a small hat. And here is what I found. Problem number 1. Tokenization isn't exclusive to XRP. Ethereum, Solana, even that cat-themed chain that you forgot you bought during 2021 mania, they all want a slice of it. Now the challenge is convincing central banks that XRP's specialized plumbing, its speed, low fees, and built-in DEX beats the kind of Swiss Army knife approach of an EVM chain. Right? Imagine pitching a one-trick kind of rodeo horse to a rancher who already owns a tractor. It's better jump, dance, and do the taxes. Yet Ripple keeps kind of stacking receipts here. Last quarter alone, more than 30 pilots, exploring CBDCs or tokenized government bonds quietly name-dropped the XRP ledger. Now, these aren't moon boys in Telegram. They're banks that wear suits on Zoom calls. One Caribbean central bank even moved its entire sandbox onto the XRPL so fast that the coconut trees didn't know what hit them. Now that's not full adoption, but it's enough kind of kindling to toast the marshmallows. Problem number 2. Becoming a reserve asset means wrestling mind shares, from gold, government debt, maybe a sprinkle of Bitcoin. Now banks hate volatility the way that cats hate bath time. Now XRP's price chart looks like a kind of, cardiogram during a kind of kettle drum solo. It's hardly calming. Now Chad's kind of counterpunch here is deliciously simple. Once banks hold the majority, price swings die because whales aren't trading. They're locking coins in private vaults like Dragon Treasure, right? Volatility shrinks, adoption snowballs, rinse and repeat. But can institutions actually vacuum up that much supply? And the ledger kind of shows roughly 53 billion XRP still in escrow, right? Drip released every month. So about 20 billion more scattered across exchanges, cold wallets, and hardware devices lost kind of behind couch cushions. Now, Chad's math says public markets could get starved down to under 100 million coins if even a handful of mega banks kind of go shopping, right? That's kind of like trying to buy pizza in New York when there's only 3 slices kind of remain citywide. The price elasticity kind of snaps so hard it whistles. But here is where my jaw kind of unhinged. A Freedom of Information Act request in late 2024 revealed correspondence between several Tier 1 US banks and the Federal Reserve's Faster Payment Task Force. Right, buried in the footnotes was a line describing XRP-backed digital settlement assets tested in closed environments. The translation here is that the big dogs are at least peeking over the fence. Does that guarantee a $20,000 sticker? No, but it does tell me that the conversation isn't confined to comment sections under a meme. So let me illustrate supply shock with a backyard party metaphor then. Let's pretend you're invited, or at least you've invited, I should say, 10 thirsty friends and filled the cooler with exactly maybe 10 premium sodas, 1 per guest. Except 2 neighbors sneaking early and chug 4 sodas before anyone's arrived. Now 6 drinks must satisfy 10 people. What happens? Well, everyone kind of scrounges the fridge, right? The price of kind of soda will, of course, skyrocket in your imaginary barter, economy. And somebody considers pawning their kind of Bluetooth speaker for just a sip. So if mega banks chug billions of XRP first, well, we retail folk become the late guests with, well, cottonmouth. Now, of course, the climax in Chad's scenario is an average level buying frenzy, right? Or at least I should say Avengers-Level, buying frenzy. Now, institutions, they simultaneously smash the green button, public liquidity practically evaporates, and price candles stretch so high that they poke the International Space Station. So he estimates that the jump from single digits to 4 digits could unfold in just a matter of hours. So picture a Netflix buffer bar stuck at 99% while your portfolio teleports to an alternative universe. So I ask myself, is that physically even possible? Right? Exchanges would likely halt trading. Spreads would widen to telephone pole distances. And regulators might throw a circuit breaker faster than you can say orderly mistake, right? Still, remember May 2021 when Dogecoin, a literal joke, printed a 12,000% rally in just 5 months, propelled mostly, of course, by tweets and FOMO. Now, swap Twitter memes for Fortune 500 balance sheets and tell me kind of black swans don't exist. So let's go ahead and sprinkle in some stats because numbers keep us all honest. The Bank of International Settlements, pegs daily global FX turnover at around $7.5 trillion. If even 1% eventually settles through an XRP, mediated kind of corridor, well, that's $75 billion in daily volume. Using the old school velocity of money formula, a reserve asset facilitating that flow with minimal slippage could justify a multi-trillion-dollar market cap. Divide by total circulating supply, trim escrow accounts for lost keys, or at least I should say account for lost keys, and you kind of leapfrog into 5-figure territory faster than you can pronounce liquidity hub. But I promised a story, not a textbook, right? So let me share a moment when this theory punched me in what feels like the mouth. Last month, I visited my buddy Carlos, a risk analyst who kind of swore off crypto after Celsius's collapse. Now, he keeps a a framed resignation letter from degen yield farming on his desk, like a kind of sobriety chip, I should say, right? A sobering moment. Now, I asked him to sanity check Chad's numbers. Now, Carlos kind of whipped out a whiteboard, drew, I guess, concrete circles labeled utility, liquidity, and even store of value, and placed XRP smack bang in the middle. He asked, or at least he should say, he quoted, if the plumbing is good and the water pressure's global price is just a timestamp on adoption, then, I almost kind of cried into my flat white. Now let's just stop here for just a moment. This might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. And this video today is for entertainment and educational purposes only. Now, what about competition? ISO 20022 compliant tokens like XLM, XDC, Algo, they're all kind of eyeing to be the piping under tomorrow's digital finance kitchen sink. Now, the room isn't kind of winner takes all, but it might be winner takes lion's share, right? XRP's head start is at least its kind of decade-long test run, if you will, with real money moving across RippleNet. Right. Meanwhile, of course, new chains still debug smart contracts that occasionally freeze, like a budget smartphone in August. The race is ultimately, I should say, about trust. Something Ripple's army of lawyers has been buying in bulk ever since the SEC suit closed its final chapter. Now, by the way, if you're hungry for uncensored shop talk on all of this, slide into our free educational Discord server. The link is chilling in the description. We do weekly voice chats, there's flash chart analysis, and yes, plenty of memes. It costs you absolutely zero except the willingness to learn. So bring your questions, leave your ego at the door though. All right, let's tackle the elephant wearing roller skates. Timeline. Now, Chad never stamped a date on his kind of $20,000 prophecy. That's kind of like weathermen predicting rain eventually, right? Critics will call it moving the goalposts, but I see it like painting, at least I should say planting bamboo, right? The first 5 years, you'll see nothing. Then suddenly it shoots 6 feet in a single week, right? Institutional adoption, it moves glacially until it doesn't, right? Often flipping overnight because no bank wants to be the last to upgrade. And of course, speaking of upgrades, Blofin's crypto exchange, yep, the one linked below, just rolled out some deep liquidity pairs for XRP against multiple fiat currencies with institutional grade custody. But here's the full disclosure. The link in the description down below is an affiliate link, which helps fund these caffeine-fueled deep dives. Use it, don't use it, totally your call. But if you're going shopping for a new trading home, Blofin's low slippage order books might be worth a peek. Now, let me confess a personal bias. I like asymmetric bets where downside is capped but upside looks like a Jack and the Beanstalk vine. Now, XRP at $2 doesn't excite Wall Street whales, but to retail investors, it's an achievable lottery ticket. One that won't require explaining to your spouse why you remortgaged the house. Now, the challenge is kind of sitting through the boredom and the ridicule while institutions quietly bag theirs. And of course, don't mortgage your house to buy any cryptocurrency. That would be foolish. One night, doom scrolling Reddit, I stumbled across an anecdote from a 2012 Bitcoin miner who sold 10,000 BTC at $6 each to buy a Camaro. Now, it kind of triggered a very painful universal truth. We humans are catastrophically bad at valuing paradigm shifts in real time. So if XRP's rails underpin future trillions, today's price may look like that 𝗗𝗃 story. On the flip side, paradigms, they do sometimes fizzle. Ask anyone still holding Beanie Babies. So where does our narrative today climax? Right, imagine the moment a major supranational body, say the IMF or the World Bank, publishes a policy, brief, maybe recommending neutral bridge assets such as XRP for cross-border settlements. Markets, they don't wait for interpretation or implementation. They will just front-run expectations. Order books will empty, exchanges throttle signups, and your barber suddenly asks you how to open a ledger wallet. That would actually be thunder under the storm, not after. Now, let's go ahead and land this plane with a dash of realism. For XRP to sprint to $20,000, 3 ingredients must mix perfectly. 1. Global regulatory clarity. 2. Institutional grade on and off ramps. 3. A trigger event, maybe liquidity crunch where traditional rails seize up, spotlighting the need for a parallel track. Any kind of missing piece and the souffle just collapses, right? Could XRP still perform decently without hitting 5 figures? Absolutely. I'd be thrilled at merely kind of hitting 10x to kind of $20 or so. Honestly, I would. But sometimes it's fun to stare over the edge of possibility. So here's a quick recap. Right, Chad's bold thesis hinges on tokenized CBDCs, XRP as a reserve asset, and a ruthless supply squeeze. Skeptics raise valid issues of competition, volatility, and regulatory whiplash. Data points from central bank pilots to Blofin's liquidity pool suggest smoke, but we don't yet know if there's a raging fire. Right, the safety kind of stance. Stay curious, right? Stay diversified and never bet more than you're emotionally cushioned to handle.